Welcome back guys to a new video. I hope you all well. My name is Julius. I hope you celebrated a lovely Christmas if you celebrated and had a good holiday. Thank you guys for tuning in. Today we want to answer the question, should you trade the last week of the year? 2023 comes to an end and we're in the last week. The market opened today after the holiday. And we want to answer the question if it makes sense to trade the last few days. If you watch this in the future, you can definitely use this information also for 2024, 2025 or whatever. Probably it's gonna be kind of the same. So if you're watching this in 2024, make sure to save the video for later to watch it when the year comes to an end. Okay, so in my opinion, the most important indicator, if it is necessary to trade, is the market structure and the volume that is being traded. And we want to look at those two things. I can imagine that a lot of you guys trade CFDs and not the future market, so you don't have the ability to take a look at the volume in the footprint, etc. So I'm going to do that for you today. First, let's take a look at the market structure. So you can definitely see that in the last few days we had a little activity. So definitely you could argue that you were able to trade something, but that is not the only thing we want to take a look at. The more important thing is the footprint chart. Okay, so therefore I opened a footprint chart in a 5-minute of the S&P 500 for you, and we take a look at the market and the volume. So if you would force me to do a trade right now, I would probably go long in the market. Right now I did a long trade in the demo account, so for the sakes of it, let's do five contracts in a demo and let's see how this position turns out when the video ends. Okay, so this is a footprint chart. We can see every contract that was being traded on each price level and also the volume. So as you can see, we already printed 30,000 contracts in the first 5-minute candle and it's not even over yet. And for me, out of my experience, that is a relatively good sign. That is a lot of volume that is being printed. So that means there are a lot of market participants who want to trade today, at least the opening of the market. So I would argue that we can take a look and go back to a completely regular day. Let's try the 27th of October. Let's see if this was even. It was a Friday, maybe not the best. Today is Wednesday, so let's go to the 25th and see how the market reacted that day. Okay, so this is the end of the market. Let's go back to the market open. That should be somewhat right here in this area. We can see here like the market spiked up a lot. We printed those imbalances, so this is the open. And as we can see, the market printed about 25 to 28,000 contracts, 30,000 contracts right here. That's what the market participants traded. So this is a usual amount for a regular day. So definitely we could argue from that it is kind of okay to at least trade the open. So we have a lot of volume that we can use in order to make some money out of the market. But from my experience, I don't like to trade the last week of the year, because in my opinion, after the holidays, after Christmas, before New Year's Eve, the market corrects a little bit, and usually those corrections differ a little bit from the usual market activity. So we definitely have some contracts, we definitely have some market participants that want to move the market, but in my opinion, it can differ from the usual market structure. So that means if you have a strategy, I don't like the term strategy at all, but that is for a future video. Right now, I'm just gonna call it a strategy. If you have an approach, if you have a strategy that usually works for you, it could be that in the last week of the year, this strategy won't work because the market moves a little differently, yeah, because market participants want to exit their positions of the year, want to enter new positions for the new year, or just want to scalp some minor activities. So I would say some big hedge funds, stuff like that, that could definitely be closed during this part of the year. Okay, so I would be a little cautious trading your usual approach. But as we can see, we have a lot of contracts that are being printed. There are market participants. So if you are a scalper and you just want to scalp the open of the day, there you go. we have a little market movement, but now we can see, okay, we're trading between the value area high and the value area low a lot. We're printing clusters, so we could mark them. We're building clusters in the market right here in this little range. So let's see how the market evolves today. But at least during the open, we had about 4 points that you could have made if you went long right after the open. So there is a little movement, but I'd say it's still, even though we have enough contracts that are being traded, it still differs from usual market activity. Okay, so that is my take on that. I would wait till at least January 2nd, maybe even a few days after that, so I can show that to you. I would probably start trading January 2nd, January 3rd, or January 8th. Okay, that is where I would start trading again. Let the market run a little bit, let those corrections finish before you enter the market. Okay, so as you can see now, this candle did not print a lot of activity. So I did enter a long position, because if you would have forced me to enter a position right now, I would just go with the trend. We built up a big opening candle, so I would just go with the trend. But as you can see, not a lot of movement is there. If you're scalping, that could work definitely, but your usual approach, your usual strategy could lead to maybe some losses. I'm just warning you. You could scalp a little bit, but I would wait till early January before entering with your usual approach. Thank you guys for watching. Make sure to leave a like and subscribe to the channel if you're interested in seeing stuff like that and seeing the real insight of trading with a footprint chart and the volume that is being printed. My usual approach is just looking at the blank 5-minute chart of the S&P 500 usually, but sometimes it also makes sense, for example, for some analysis like this, to look at a footprint chart to really see every contract that is being printed that moves the market. Those CFD brokers, those CFDs you trade, they don't move the market. It's the underlying future that really influences in which direction the S&P 500 will go. So just for fun, I also opened a footprint chart of the Dow Jones index, and as you can see, the volume, it's right here in the lowest line here. As you can see, during the open 5-minute candle, only 3,800 contracts were printed. So despite the belief that the Dow Jones is the most traded instrument out there, it's actually by far the S&P 500, but that differs from the CFD brokers. At CFD brokers, the most traded instrument is most of the time the Dow Jones index, which is mostly named like US 30 or Wall Street 30 or something like that. That is probably the most traded with the CFD brokers. But in real, on the underlying real future market, it's by far the S&P 500 with the most contracts. So as you can see, we're in about 10 minutes with this trade, and the market did not move that much. You can look at the footprint for a second to really see we built some clusters down here. That's the purple, those purple rectangles. That means that a lot of volume was being printed here, and the market is still more or less long. That's why I entered a long position. But before I would really trade this market, I would wait longer and really observe the market before entering a long trade. This was just on a demo account, just for fun. If you would have forced me to do a trade, I would have ended a long right there. Okay guys, thank you for watching. Make sure to leave a like and subscribe. Next year we will break through. We will trade a lot live. This channel is known for real live trading. I'm not hiding any losses from you. This is not CFD YouTube guru stuff. This is real futures live trading. So if you're interested in that, leave a like and subscribe to the channel. Thank you for watching. See you next year. Have a great time and take care of yourself. See you then. Bye bye. Oh, and let me just close the trade. About $300. Yeah, now this little movement. $300, that's fine for a demo trade. See you. Bye bye.